Hello, this is Stephen Harris, a head trader from Falcon Global, where we model best practices for investors, traders, and day traders from entry to exit every trading day. In this daily video, I provide my opinion and insights of current market trends, market timing, volatility, and hedge risk levels for the upcoming day for the key U.S. financial markets. It is 6:55 a.m. Central Time, and I'm recording this in preparation for the market day of January the 29th, 2015. Full disclaimers are at the end of the video, but be aware that this is for educational purposes only, and only you are responsible for the investing or trading decisions that you make. Well, a lot of damage was done to our technical market setups yesterday, so let's dive in and see just what this might mean. First of all, so what happened in the overnights? What kind of reaction to all that weakness after the FOMC announcement? Well, we did get bounces from the cousins of the S&P as well as the Dow. You often look for those two to move together, as well as the cousins, the Russell and NASDAQ, to move together. And indeed, the couplets worked pretty much in tandem. You had the S&P and the Dow stronger but moving together, and then you had the Russell and NASDAQ also up but not as strong as the first two. Obviously, overnight earnings announcements play into this, especially this time of the year. But in general, we did have a bounce in the overnight action. Today is going to be absolutely critical if we are to maintain any sense of an intermediate term bullish posture. Today is absolutely critical. In terms of the other futures markets that we follow, crude oil down big, down 1.31%. Gold down big, also down 1.31%. Bonds and euro were essentially flat, nothing really special to mention there. Overnight action in the overseas markets, pretty active. You have China down 1.32%, Hong Kong down over 1%, as was Japan. Germany, the DAX was essentially scratch, and the United Kingdom down about 0.58. Quite a few macroeconomic reports for today. You have the typical Thursday lineup of unemployment claims before the market opens, followed by pending home sales. If you're into natural gas, you have that report. It's a yellow flag in terms of affecting our index markets and so forth, but if you're a natural gas trader, you have to pay attention to that. It is one of the more liquid futures markets. In terms of Friday, we have a GDP, which is always very important, and then you have the PMI, as well as the University Consumer Sentiment Report. And that PMI and Consumer Sentiment do get released during the trading day, so pay particular attention to that coming up with tomorrow. In terms of volatility, as you would expect, things have heated up somewhat. Our implied volatility is up in the upper third now, especially on the Dow. The Dow's been quite hot lately and is up to an 80 now. Our short-term VIX has climbed, and it's now up over a 21, nearly 22 at 21.78. You see the number of standard deviation moves in the last couple trading days. Quite a bit of activity going on. Hopefully, we're going to see quite a bit of follow-on volatility today to the upside. We really need a big up day if we are to hold on to our posture. And this is reflected, and this has really been quite unusual the last few weeks. When you come to the kind of level we are with our trends, our portfolio trader posture is now degraded to uptrend under pressure. Active trader posture calls for no new short-term or intermediate-term bullish trades. Position sizing has been reduced on anything that were to be initiated. You have buy alongside portfolio exposure up to 50% on the one opinion, and the second volatility-based opinion would call for a 50 to 75%. So reduced position sizing would be a call. You do often, when you look at this pattern of FOMC and down action, see a bounce, and historically we would expect that there would be bullish response. In fact, I saw one estimate of 95% probability that within 3 days that we would have a higher close than yesterday's close. 1 day outlook bullish, 3 day outlook bullish, 2 week is still slightly bullish. But our market forecast opinion has degraded to bearish. 3 of the 4 indices are bearish now and would not call for new trades, short or intermediate term. The Russell is the odd one, and it is still holding up as bullish. So there is some hope for the bulls, and certainly that the small caps, the growth-oriented stocks, and the Russell would be holding up well is a positive for the bulls. We'll be seeing if that can hold up. But our threshold level has been elevated to now a level 1, or hedge warning status is a level 1, which to us means yellow light, tap on those brakes. And we've had quite a number of pops in terms of the volatility based risk warnings. We have a market in decline warning, we have a sharp increase warning, we've had a VIX spike fire off. Obviously we're now over a VIX over an 18. The number of distribution days, the S&P is now at a 4. If it goes to 5, this would probably go to a further upgrade in our hedge status. Obviously the VIX phase is now trending up. You have on our intermarket risk aversion indicators, 1 is risk on, and 4 are currently postured to risk aversion. So across broad sections of the market, you're having a lot of aversion to taking on risk, so very difficult for the bulls to win. In terms of option income strategies, after only just a handful of days within the window, VIX is now outside the acceptable volatility window and not conducive to option income strategies. We've had really a very unusual combination of action in this month, where when we have gone to, in quotes, the safe zone, normal conditions to initiate new long positions, they have lasted very short periods of time before rolling over and degrading. It'll be seen as to whether this is topping action and we are truly getting ready to roll over into a bearish intermediate trend, or if this is just a sideways consolidation and range trading period, in which we will eventually break out to the top side and then resume the bullish trends. But right now, this is for very, very nimble traders, and take profits relatively quickly. Watch your position sizing as you go in, and take only the strongest of setups if you're taking a bullish position. And on the flip side, if you're taking bearish positions, our recent trends have shown that we've had very fast, rapid moves back up, and even within a couple, maybe 3 trading days, you'll see that 75% of the pullback gets absorbed and recovered. So it's very difficult to go for any size targets at this point. So be very quick to take your targets in this environment until we break out of this range area. Some key other metrics that we'll take a look at. Our market posture, and again, we've been talking about how these lines have been relatively flat, so they flip quickly. Well, with the weakness yesterday, we've seen a lot of down postures coming across our sectors. Even utilities, which has been the most consistent performer for months now, is starting to see some weakness come into play. And remember, in a bear market, while some such as utilities and consumer staples may perform better, they will all drop. So they're still net down. And you could see the utilities and these consumer staples and even healthcare have net losses if we truly get very bearish. As a percent change, you see that. And then industry groups, retail, railroads, transportation, internet, healthcare. Biotech took a big hit yesterday, and a major bearish engulfing candle in the IBB after setting the day before a 52-week high. So a major rejection in that particular industry group was seen, and it even closed below the 10-day. So think about that, what that says. You have a 52-week high, and then the very next trading day you close below the 10 simple moving average. So major rejection was seen in this industry group yesterday. So it's very difficult to set up new trades in this environment. You got to be aware of that. One of the tells to watch for, in addition to the performance of the NASDAQ, the financial sector XLF, is tilt. If you'll watch tilt, we've been in a channel, and the top of the channel is probably somewhere around 138.15. If you're going to see the broad market become bullish, you're probably going to need to see TLT start to resist, start to find some resistance and to roll over. And to watch TLT as a sign that perhaps the broad markets are finding a bottom and could be setting up to move up. So a lot going on right now, and it is very interesting times for sure. If you like what you're getting here from this morning video, your encouragement is greatly appreciated. And the way you do that encouragement is you like us on YouTube, or you like us on Facebook, or you perhaps even comment on Facebook, or you can as well send suggestions and other commentary to our email at support@falconglobaltraders.com. And then of course we model these kinds of activities in our 3 live trading rooms, and free trials are available there. More information is available at the falconglobaltraders.com website. Disclaimers, as always, just hit pause if you need more time to review the disclaimers. And as always, we greatly appreciate all of you in the Falcon Global Trader community. Thank you and good trading.